Good day to everyone. First of all, thank you for watching our video presentation. Our group consists of 4 members. I'm Tijan Imang together with Ahmad Safiq, Muhammad Idlan and Nurul Fatin Alia. Today we will be presenting on analysis of corporate financial performance, a trend and comparative study of HSS Engineers Berhad and KKB Engineering Berhad. Let's get started. For the introduction, I will introduce both companies. HSS Engineers Berhad, founded in 1984, is a leading engineering consultancy firm in Malaysia. It focuses primarily on infrastructure and transportation projects. KKB Engineering Berhad, established in 1979, is an engineering and manufacturing company based in Sarawak, Malaysia. It operates in street fabrication, manufacturing, and civil construction. Both companies have a significant impact in their respective sectors, contributing to national infrastructure development. Now let's move to the trend analysis for both companies. This slide shows the trend analysis of the current ratio for HSS Engineers and KKB Engineering from 2022 to 2024. HSS Engineers demonstrate a steady improvement in its current ratio, increased from 1.56 in 2022 to 1.97 in 2024, indicate a growing ability to cover short-term liabilities with its current assets. KKB Engineering, on the other hand, shows a much larger current ratio, rising from 7.86 in 2022 to 11.74 in 2024, reflect its strong short-term financial health and capacity to meet obligation. Now we are comparing the quick ratios of HSS Engineers and KKB Engineering. HSS Engineers shows consistent improvement in its quick ratio, increasing from 1.53 in 2002 to 1.88 in 2024, which highlights the company's growing ability to meet its short-term obligation without relying heavily on inventory. While for KKB Engineering, also demonstrates positively growth, with its quick ratio rising from 7.23 in 2022 to 10.88 in 2024, positioning the company in a very strong place to cover its liabilities. Now is total asset turnover for HSS Engineers and KKB Engineering from 2022 to 2024. HSS Engineers has a relatively stable asset turnover ratio, increasing slightly from 0.46 in 2022 to 0.48 in 2024, indicate consistent revenue generation per unit of asset over the years. While KKB Engineering, however, has a significantly higher asset turnover, with its ratio ranging from 3.38 in 2022 to 2.48 in 2024, reflecting greater efficiency in utilizing assets to generate sales. Overall, while HSS Engineers maintain steady efficiency, KKB Engineering use its assets more effectively to generate higher revenue per unit of assets.
In this section, I will be presenting the performance analysis of HSS Engineers and KKB Engineering based on selected profitability ratios over the years 2022 to 2024. Firstly, let us look at the return on assets, or ROA. Based on the table, HSS Engineers shows a consistent improvement in ROA, increasing from 3.75% in 2022, 5.55% in 2023, and further to 5.95% in 2024. This indicates that HSS Engineers is becoming more effective in utilizing its assets to generate profits over time. On the other hand, KKB Engineering recorded a higher ROA in 2024 at 7.27%. compared to 5.00% in 2023 and 5.30% in 2022. Although KKB Engineering shows improvement, its performance fluctuates across the years. Overall, HSS Engineers demonstrates more consistent and effective assets utilizations, while KKB Engineering shows improvement but with less stability. Next, we analyze the net profit margin, which measures how much profit a company retains from its revenue. HSS Engineers shows a strong upward trend with net profit margin increasing from 8.14% in 2022 to 10.90% in 2023 and reaching 12.38% in 2024. This suggests improved cost management and stronger profitability. In comparison, KKB Engineering shows fluctuations in its net profit margin, recording 16.70% in 2022, dropping to 12.27% in 2023 and increasing again to 18.80% in 2024. While KKB Engineering achieved higher margins in certain years, the fluctuations indicate volatility in profit generation relative to sales, whereas HSS Engineers demonstrates more stable improvements. Lastly, we look at the operating margin, which reflects operational efficiency. HSS Engineers shows continuous improvement in operating margin, increasing from 12.93% in 2022 to 16.58% in 2023 and further to 18.16% in 2024. This indicates increasing operational efficiency and better control over operating costs. In contrast, KKB Engineering maintains relatively low operating margins with 1.99% in 2022, 1.87% in 2023, and 1.86% in 2024. This suggests that KKB Engineering faces pressures on operational costs with minimal improvement in efficiency. Overall, HSS Engineers demonstrates stronger operational performance compared to KKB Engineering. Thank you.
This analysis compares the earnings per share of HSS Engineers and KKB Engineering from 2022 to 2024. HSS Engineers shows a steady increase in EPS, rising from 3.05 in 2022 to 4.13 in 2023, and further improving to 4.95 in 2024. This consistent growth indicates stable profitability and strong financial performance. In contrast, KKB Engineering's EPS increased sharply from 1.62 in 2022 to 9.82 in 2023, before declining to 6.84 in 2024. This pattern suggests fluctuations in earnings and less consistent shareholder value. Overall, HSS Engineers demonstrate more sustainable earnings growth, while KKB Engineering exhibits higher volatility despite higher peak earnings. This analysis compares the dividend payouts ratio of HSS Engineers and KKB Engineering from 2022 to 2024. HSS Engineers shows a relatively balanced dividend payout trend, increasing from 0% in 2022 to 22.30% in 2023, before moderating to 17.40% in 2024. This suggests that the company distributes dividends while still returning a portion of earnings. In contrast, KKB Engineering records fluctuating dividend payout ratios, moving from 1.05% in 2022 to 4.81% in 2023, then declining to 1% in 2024. This variability reflects inconsistent profit distribution and a less stable dividend policy. Overall, HSS Engineers demonstrate a more structured dividend strategy, whereas KKB Engineering exhibits greater volatility in dividend payouts. This analysis compares the debt ratios of HSS Engineers and KKB Engineering from 2022 to 2024. HSS engineers maintain relatively low and stable debt levels, with its debt ratio increasing slightly from 30.20% in 2022 to 38.10% in 2023 and further to 39.90% in 2024. Although there is a gradual increase, the overall level remains moderate, indicating manageable financial risk. Similarly, KKB Engineering records lower debt ratios overall, fluctuating from 6.90% in 2022 to 7.50% in 2023, before declining to 6.20% in 2024. This trend reflects reduced reliance on debt financing. Overall, both companies demonstrate prudent debt management, with KKB Engineering maintaining significantly lower leverage compared to HSS Engineers. This slide analyzes the time interest earned ratios of HSS Engineers and KKB Engineering from 2022 to 2024, measuring their ability to cover interest expenses. HSS Engineers shows a strong and improving capacity, with this ratio rising consistently from 7.58 to 11.7. Meanwhile, KKB Engineering demonstrates exceptionally high coverage, with this ratio surging from 3340.50 to 9575.59, indicating extremely robust earnings. Overall, both companies exhibit a strong and strengthening ability to service their debt, with KKB Engineering's position being particularly dominant due to the extraordinary magnitude of its earnings relative to its interest payments.
Alright, let's take a look at comparative analysis between two companies. HSS Engineers Berhad shows stronger financial stability compared to KKB Engineering Berhad. HSS Engineers Berhad relies less on debt, making it a safer company with lower financial risk. It also has better liquidity, which means it can comfortably meet its short-term obligations. In terms of profitability, HSS is more efficient generating returns from its assets and equity. This matches its business model and engineering consultancy, which is less capital intensive and usually provides more stable earnings. In contrast, KKB Engineering Berhad operates in the fabrication and construction industry, which requires higher capital, equipment, and materials. Because of this, KKB Engineering Berhad usually earns lower profit margins despite having large operation outputs. The company faces higher production costs, which reduce its ability to convert revenue into strong returns. Although KKB still maintains reasonable liquidity, its overall financial performance appears weaker compared to HSS Engineers Berhad. In conclusion, the comparative analysis shows that a HSS Engineers Berhad is financially stronger and more efficient than KKB Engineering Berhad. HSSEB's low debt usage, better liquidity, and higher profitability ratios reflect a stable business model with effective cost management. Meanwhile, KKBEB, which operates in more capital-intensive industry, faces lower profit efficiency and higher operating challenges despite maintaining reasonable liquidity. Overall, HSSEB demonstrates stronger financial health and better returns, making it the more stable and efficient company compared to KKBEB. And that's all from us. Thank you for your attention and have a good day.